Whether your retirement is years away or right around the corner, your investment portfolio should be designed with your financial goals in mind. It needs to be forward-thinking enough to handle the whims of the market, but flexible enough to make the changes on the fly. One of the most important concepts for any investor to understand is asset allocation. Put simply, asset allocation describes the division of stocks, bonds, and cash that make up your investment portfolio. Although this concept is straightforward, it has one of the largest impacts on your financial future. Each asset class has its own set of risks and rewards, depending on your time horizon and financial goals. You and your financial advisor may make adjustments to your portfolio over the years as your needs change. So now I'm just going to go briefly into each of these asset classes to provide you a little bit more information on each of them. First, stocks, also called equities, allows you to own a share of a publicly traded company. By investing in stocks, you have the potential for a higher return on your investment. But if the company has a bad year, or if the economy takes an unexpected turn, you may also lose money. Next, let's look at bonds. Overall, bonds have a steadier source of fixed income. However, bonds are subject to interest rates and inflation risks, and their rate of returns tend to be lower. Next, let's look at mutual funds and ETFs, which are exchange-traded funds. Now, mutual funds and ETFs are pools of multiple companies in which you can invest. While many mutual funds have a mix of stocks and bonds, some specialize in one or the other. Mutual funds offer less risk than investing directly in stocks, as diversifying your asset allocation tends to spread the risk. Last, let's look at cash and cash equivalents. Cash gives you flexibility for any unexpected emergencies that may arise. If your hot water heater dies, having funds on hand to take care of it without resorting to a credit card is helpful. However, your cash on hand cannot earn you the money the way other investments might, but it is important to make sure that you have a specific percentage of your fixed expenses on a monthly basis, that you have an amount that's sitting in cash at least to cover you 3 months. You always want to have that first before thinking about putting money into other investments. When it comes to managing your portfolio, asset allocation requires a more hands-on approach. Setting it and forgetting it may sound appealing, but changes in the market warrant a portfolio review to make sure your asset allocation still makes sense. Working with a financial advisor is a great way to make sure that your asset allocation reflects your goals and they can make adjustments to any changes life throws your way. For more financial tips and strategies, be sure to follow me on Instagram, where you can also download my free Financially Fit 12-month planner. Let's make this the year you become financially fit.